In 2025, Ford sold more electric vehicles than it ever had, and it lost $8.2 billion. Those two facts are in the same document. I'm Marlo. Every number in this video comes from a document you can look up. Nothing from a press release, nothing from an estimate. Today, that document is Ford's annual report for 2025, filed with the SEC in February. I want to show you what happened to Ford's electric division last year, because almost everybody has it backwards, in both directions.
Start with the top line, because it is not what you would expect from a company that lost $8 billion. Ford's revenue in 2025 was $187 billion. That is the most money Ford has ever taken in a single year, up from $185 billion the year before and $176 billion the year before that. So this is not a story about a company nobody is buying from. Sales went up. Ford reports itself in 4 pieces, and the 4 pieces are the whole point of this video, so let me put them on the table. The first is Ford Blue. That is the traditional business, petrol engines and hybrids, F-150 pickups, Broncos, Mustangs. In 2025, Ford Blue brought in $101 billion and made $3 billion of operating profit.
The second is Ford Pro. This is the commercial side. Work vans, fleet trucks, the service contracts that go with them. It is the least glamorous thing Ford does. Ford Pro brought in $66 billion and made $6.8 billion. Read those two again, because the ratio matters. Ford Pro earned more than twice what Ford Blue earned on 2/3 of the revenue. The division that sells vans to plumbers and electricians is the most profitable thing in the company by a distance. The third piece is Ford Credit. That is the lending arm. It finances the cars and it finances the dealers who hold the cars. $13 billion in revenue, $2.6 billion in profit. And the fourth is Ford Model E. That is the electric division. Everything battery powered. The Mustang Mach-E, the F-150 Lightning, the E-Transit van. Ford Model E brought in $6.7 billion in 2025 and lost $4.8 billion. I want to be precise about what that number is because I am going to use it a lot. It is what Ford calls segment EBIT, earnings before interest and tax. It is the operating result of that division. It is not the write-downs, it is not the one-off charges, it is the ordinary running result of building and selling electric vehicles. $4.8 billion of operating loss on $6.7 billion of revenue. Ford puts the margin on that in its own filing, so I do not have to work it out. Negative 72.1%. For every dollar of electric vehicle Ford sold last year, it lost about 72 cents. Now, add the 4 divisions up and you get something odd. Ford Blue made $3 billion, Ford Pro made $6.8, Ford Credit made $2.6, Model E lost $4.8. There was a corporate overhead line of about $800 million. Put it together and Ford's operating businesses made $6.8 billion in 2025. The company reported a net loss of $8.2 billion. So somewhere between the divisions made $6.8 billion and the company lost $8.2 billion, there was a gap of about $15 billion. That gap is what this video is about. Here is the table that made me want to make this video. It is Ford Model E, 3 years running, straight out of the filing. 2023, Ford wholesaled 116,000 electric vehicles. Revenue, $5.9 billion. Operating loss, $4.8 billion. Margin, negative 81%. 2024, 105,000 vehicles, fewer than the year before. Revenue fell to $3.9 billion, and the loss got worse, $5.1 billion. That gives you a margin of negative 132.3%, Ford's own number in Ford's own filing. Stop on that one for a second. A margin of negative 132% means that for every dollar of revenue the electric division brought in, it lost $1.32. It was not losing money on the margin, it was losing more than the entire value of what it sold.
And then 2025. 178,000 vehicles. That is up 70% in a single year. Revenue, 6.7 billion, up 73%, and the operating loss, 4.8 billion, slightly smaller than the year before. Which means the margin went from negative 132.3% to negative 72.1%. It improved by 60.3 percentage points in 12 months. I want to be very clear about what that is, because this is the part almost nobody says out loud. 2025 was the best year Ford's electric division has ever had. It sold 70% more cars, it took in 73% more revenue, and it cut its loss per dollar of sales roughly in half.
Now, I said everybody has this backwards, in both directions. So let me do the other direction, because this is the bit that matters. If you have seen anything about Ford and electric vehicles in the last year, you have probably seen some version of Ford's EV business is collapsing, or nobody is buying electric Fords. The filing does not support that. Units went up 70%. That is not a collapse. That is the fastest growth that division has ever posted. But there is a second version of this story going around, and it is just as wrong in the opposite direction. That Ford has turned the corner, that the electric business is on its way to profit, that the worst is behind it. The filing does not support that either. Because in the same 12 months that Model E sold 70% more vehicles and halved its loss per dollar, Ford wrote the division down. Let me show you what that looks like on the balance sheet before I show you the charge itself. At the end of 2024, Ford Model E held $17.1 billion of assets. Factories, tooling, equipment, the things you need to build electric cars.
At the end of 2025, the same division held $6.5 billion. $10.6 billion of assets gone from that division's books in 1 year, a drop of 62%. That is not a company that thinks the worst is behind it, and it is not a company whose EV business is failing to sell cars either, because the cars sold. Both of the easy stories are wrong. What actually happened is stranger, and it is the reason I wanted to put this on the table. Ford's electric division had its best year, and Ford wrote it down anyway. I want to be careful here, because there is a line I am not going to cross. The filing tells me what Ford charged, and when, and against what. It does not tell me why. There is no sentence in this document that explains the reasoning, and I am not going to invent one for you. Anybody who tells you confidently what Ford's executives were thinking is telling you something they cannot know. What I can do is show you exactly what they wrote down. So let me do that.
Ford has a line in its accounts called special items. These are the charges that sit outside the ordinary running of the business. Restructuring, write-downs, one-off costs. They do not appear in the divisional profits I read you earlier. They sit below. In 2024, Ford's special items came to $1.9 billion. In 2025, they came to $17.4 billion. Here is what is inside that number, line by line, as Ford lists it. The largest single entry reads, and I am quoting the filing, Model E asset impairment and EV program cancellations, $10.7 billion. The second entry is the disposal of something called BOSC. That stands for Blue Oval SK, which is the battery manufacturing joint venture Ford set up to supply its own electric vehicles. Disposing of Ford's position in it cost $3.2 billion. There is a further $225 million for Ford's share of that same venture's asset write-downs. Then there is a line for the cancellation of an all-electric three-row SUV and the actions that followed from it. $1.2 billion in 2025. And note, Ford had already charged $1.2 billion against that same canceled vehicle the year before. So that is roughly $2.4 billion across 2 years for a car that was never built. Add the electric lines together. $10.7 billion plus $3.2 plus $1.2 plus the $225 million. $15.3 billion. Out of $17.4 billion of total special items, $15.3 billion of it is the electric business. That is 88%.
The rest is ordinary corporate wear and tear, restructuring in Europe, a pension remeasurement, a fuel injector service action, a legal matter. So now put the whole year together. The electric division lost $4.8 billion running its normal operations.
And Ford charged another $15.3 billion against electric assets, canceled programs, and the battery venture. Roughly $20 billion in one financial year on one bet. For scale, Ford's entire market value has spent recent years somewhere in the region of $40 to $50 billion. I'm not going to give you a precise figure for that because it moves every day, and it is not in this filing. But the order of magnitude is the point. This was not a rounding error in a big company's accounts. This was a substantial fraction of the whole company, written off against one strategy in 12 months. And that is what closes the gap I left you with in Act 1. The four operating divisions made $6.8 billion. Interest on Ford's debt took $1.3 billion. Special items took $17.4 billion. Tax and minority interests gave back $3.6 billion.
And the result is a net loss of $8.2 billion, which works out at $2.06 of loss for every Ford share in existence. The year before, the same company earned $5.9 billion, or $1.46 a share. One more number, and then I will draw this together. Ford spent $3.5 billion of capital on the electric division in 2025. New tooling, new plant, new equipment. That is money spent building the thing in the same 12 months that $10.7 billion of it was written off the value of it. I find that the single strangest fact in the entire filing. Ford was still investing $3.5 billion into Model E while simultaneously marking $10.7 billion of it down. Both of those things are true. Both are in this document, and they are 11 pages apart.
So what do you actually take away from this? The first thing is the one I keep coming back to. Ford's electric division improved on every operating measure it reports: volume, revenue, and margin. And it got written down in the same year. Improvement and impairment in one filing. If you only heard one of those two things, you heard half the story. And the half you heard was probably the one that fitted somebody's argument. The second thing is about where the money in this company actually comes from. There is an enormous amount of noise about Ford and electric vehicles, and almost none about Ford Pro. Ford Pro is vans. It is fleet contracts. It is the truck that turns up when your boiler breaks. It made $6.8 billion last year, more than twice what the entire petrol and hybrid car business made. And it is quietly funding everything else. The third thing is what a write-down actually is, because it is easy to hear $10.7 billion and picture money leaving a building. That is not what happened. A write-down is a company saying that assets on its books are no longer worth what the books say. The cash was spent years ago on factories and tooling and battery plants. What changed in 2025 is Ford's own assessment of what those things are worth now. Which is why I keep saying the filing tells you what and not why. Ford recorded the charge. Ford did not explain the reasoning, and I am not going to fill that silence in for you. And that is really the reason I make these. Every number in this video is one you can pull up yourself. It is Ford's Form 10-K for 2025, filed on the 11th of February under SEC Central Index Key 000037996. The segment tables are in Note 26. The special items are in the management discussion. You do not have to take my word for any of it, and you shouldn't. If you want the version of this in 90 seconds, there are 2 shorts on this channel this week that pull out the segment note and the loss per vehicle. And next time, I am going to Disney, because Disney has a division with a very similar shape to this one, an enormous, expensive strategic bet reported separately that spent years losing money in public while the rest of the company paid for it. Disney Plus took 5 years to make a single dollar of operating profit, and the filings show exactly how much that cost. That is the next one. Thanks for watching.